Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will open the floor to get you connected with our experts to help you better. But before that, let's have a look at what the markets are up to. So Cheryl, finally a sea of green coming in for the Indian markets, and we are holding on quite steadily since the start of the day.
Absolutely. A very good morning to you, Shrishti. Good morning coming in for the markets as well, and not just the Indian markets. Global handover also was in the positive territory. You had dovish sort of a commentary coming in from a lot of Fed officials, so that kind of sparked up the US markets. You saw the trickle impact on the Asian markets as well, and our markets are holding on to good gains near the day's highest point, coming in for the benchmark indices above that 19,600 mark. When it comes to the Nifty, you have Sensex that's trading with gains about 340 points, and you have Nifty Bank that is seeing tad bit of underperformance compared to the benchmark indices. 0.4% uptick coming in for Nifty Bank as compared to 0.5% uptick coming in for the benchmark indices. If you look at the advanced decline ratio, very much tilted in the favor of the gainers at this point in time. So hopefully we will be able to sustain and in fact build on it as the day transpires. Talking about the list of gainers, then you have Bharti Airtel hitting a record high levels in today's trading session, one of the top gainers on the Nifty, followed by Coal India, which is also seeing good gains. You have Adani Ports that has reversed yesterday's losses. You have a couple of brokerage notes that have come on with a positive commentary coming in for Adani Ports, and that's the reaction that you can see on your screen. 3% uptick coming in for Adani Ports. Your Adani Enterprises also seeing uptick of about 2%. Tata Motors, Maruti Suzuki are the other set of gainers in trade today. On the flip side, and the losing end of the market, IndusInd taking it pretty easy in trade today. 1% downtick coming for IndusInd Bank. You have Dr. Reddy's, TCS ahead of their numbers. TCS 0.5% downtick coming in. Remember, tomorrow you will have the numbers coming in for TCS. Along with that, they are also going to consider the buyback proposals. So watch out for TCS, Cipla, as well as Asian Paints are the other set of losers in trade today. Let's take a closer look at the sectoral indices then. And talking about the sectoral indices, all the sectors are in the positive territory, barring the pharma sector. Actually, the pharma sector is taking a bit easy, 0.2% downtick coming in for pharma index. But we will talk about pharma in greater detail in our Buy Now, Sell Now lens. But on the flip side, realty index, 4% uptick coming in for that one. And it is the top sectoral gainer. So that's the way how the markets are looking like at this point in time. Shrishti, yes, benchmarks are holding on to good gains, but like I said, pharma, the only weak spot in the market, but you have a positive note that's come in, isn't it?
Well, yes, for today, Cheryl, it seemed to be a weak spot in the markets, but given the volatility in the market, we need to remember that just yesterday, the pharma counters were all buzzing on the back of their nature of being defensive. And today, a positive note coming in from Macquarie as well, where they are positive on the sector. And what are the key triggers that Macquarie is highlighting, and what are some of their top recommendations? Let's get in more details from Vamakshi joining us right now. Take it away, Vamakshi.
Well, yes, the entire pharma sector is in focus today, and in fact we have a brokerage note coming in from Macquarie. Largely they have highlighted that the drug shortages in the US market continue to rise. In fact, higher interest rate scenarios are creating multiple headwinds for some of the generic manufacturers. When they talk about competition, that has seen a slight bit of a reduction, which is a positive, and in fact this reduction has come in for the first time in the past decade. So given a confluence of all of these factors, Macquarie highlights that companies with a meaningful US generic exposure stand to benefit from the current disruptions. Their pecking order is as follows. They prefer Sun Pharma over Dr. Reddy's, Aurobindo Pharma, Cipla as well as Lupin. So all in all, they've gone ahead and maintained their outperform rating as well as hiked their target price for counters such as Aurobindo Pharma, Lupin, Alchem Labs as well as Cipla. They've maintained their outperform rating for Sun Pharma with a target price of 1,275 as well as for Dr. Reddy's with a target price of 6,300 rupees per share. And they've maintained an underperform rating for Zydus Life Sciences. For Ipca Labs, however, they've maintained a neutral rating. So all in all, given this report, keep an eye out on all of these pharma counters.
Thank you so much for that. Actually, Vamakshi, we are definitely watching out for all of these pharma names, but let's hear out what exactly Nikunj Dalmia, who's the managing editor of ET Now and ET Now Swadesh, had to say on the pharma space as well as on the Macquarie report.
Divide the pharma space, you can broadly divide it into two, and this is just what I've learned over the years. There is chronic and there is acute. Chronic is essentially lifestyle diseases. So for example, if you need a blood pressure medicine, if you need a diabetes medicine, that is something I just love to talk about it. I just
You
love to
love
talk
this.
about it. I
It's
just
your
love to talk
thing.
about it.
Yeah.
So I'm just correlating that. In fact, the Macquarie reports talk about it. I'm not spoken to the analyst, but it's just a coincidence.
Go ahead.
Okay. No, so there is chronic and there is acute. Acute is infection. During COVID, acute companies which had an acute portfolio, acute drug portfolio, did it very well because it was a disease. Then you got lifestyle, which is chronic. Now, because of COVID, acute companies which had acute portfolio, they did rather well. Chronic took a backseat. Now chronic is making a comeback. Tension, stress, whatever you may want to call it, that is coming back. So companies which have a portfolio which is tilted towards acute, they are the ones who are making a comeback. They are the ones which are related to chronic, they are the ones who are making comeback. Which are the companies which are in that space? Well, there is Eris, there is Lupin, there is Cipla, there is Sun Pharma. So that, I think there is a change in terms of the portfolio positioning which will happen. B, we must also recognize that now the pricing power is also a function of availability and need. And in the US market right now, there is a shortage of drugs. US FDA has been very stringent in order to, they've been very stringent post the COVID lockdown started. So I think they're going to go easy on that. And then third, what Anisha mentioned, pricing power. The point here, Anisha, is that there was a time when everything in the pharma space went higher. But now I see a categorization. So I will not be surprised that US specific pharma companies will do well. Within that, companies, like I said, which have exposure to chronic diseases or companies which have a chronic disease portfolio, I think they are likely to do better.
Okay, so that's the editor take coming in on the pharma space, and given the kind of tailwinds that we are having from the US drug shortages, the companies having more exposure to the US markets are likely to benefit. But let's move on and let's connect with our experts then and try and find out that which are the top recommendations coming in. And with this, let me welcome on board Shahina Mukaddam as well as Kunal Bothra on the technical side. A very good morning to both of you and thank you so much for your time. Shahina, first coming to you, what's your take on the pharma space, because we have seen the sector performing quite well because it is seen to be coming out after a deep underperformance, especially post-COVID, and given the kind of tailwinds that Indian markets are being a bit supportive, the US drug shortages as well as some of these key launches are gaining market share in the US market. So which are your top recommendations, and keeping quarterly earnings in view as well, what will be your take for the pharma space?
Well, after a long period of consolidation, what we saw in the last 6 to 9 months was a nice bounce back for pharma companies. Of course, this backed by their new launches in the US market. And as Nikunj rightly put, I think the US market is starting to look much better for Indian companies, both in terms of new product launches, which is contributing to their overall top line revenue growth, as well as if you see on their margin front, they're doing better with generic prices having stabilized in the international markets. So I think, the demand for pharmaceutical products has always been there, but now the support in terms of pricing and margins is coming back. Also, what we've seen is that a lot of FDA inspections for the plants have taken place in the last 1 year, and the companies which have come out well in these inspections are actually now expected to do pretty well over the next 1 to 2 years. So I would go with the Macquarie report recommendations. In fact, they are very close to my own. I should also say that I personally also have been holding from a long time some of those stocks like which continue to be my top pick even today, given the fact that the valuations are lower compared to the rest of the sector. Like for example, you have Dr. Reddy's. They have had a very strong first quarter. I believe even the rest of the year would be good, despite the fact that some of the new launch that took place and contributed to US product sales in the first quarter may sort of come down over the next couple of quarters, but you have other products that will take place. You have Aurobindo Pharma, where of course the stock has doubled in the last 1 year. But there also, I think the valuations are still attractive. They have come through nicely through the US FDA inspections of their plants, and I think the balance sheet is pretty strong. Also, I think Cipla, which actually is going to see support from the M&A activity potential, and here also I see Dr. Reddy to be a very strong suitor, and I think the two together would make a very strong pharma company in terms both of valuation as well as in terms of product portfolio. So I think these would be largely my picks in the sector.
All right, so those are the picks coming in from Shahina in the pharma space. But Kunal, a huge space to talk about, isn't it, pharma? And out of that huge space, which are your top bets? Because you know, after a lot of consolidation, you saw a sharp up move. Then you had Mr. Basin also join us on the channel today and say it's a darling sector right now. Do you concur with that view? Is it a darling sector right now?
Yeah, it's more of a consistent sector, and I think that's the highlight for pharma stocks from 2020. Many of the stocks managed to make a very fresh comeback. It is a lull period for 21, 22, I think broadly for the pharma pack, pharma stocks. But then I think start of 2023 or rather end of 2022, these stocks have made a steady comeback. Many of these stocks have managed to recover and recuperate the losses over the last couple of years prior to that. Now I believe from a short to medium term play, I think the likes of Glenmark Pharma looks very attractive. Zydus Life is something which I would be keenly bullish on. So the mid cap and the pharma stocks are looking quite attractive. Granules is something which I've been tracking off late, and that stock is also looking attractive at the 350 plus mark where it's trading right now. So these are the three names which I would highlight specifically from the pharma pack.
Okay, so those are the top recommendations coming in from the fundamental as well as the technical point of view. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. As we come right back, it's time to start taking all your stock-related queries. So stay tuned and start writing to us.
Welcome back. You're watching Buy Now Sell Now on ET Now show, where we get you answers for all of your stock related query. Remember, viewers, you can connect to us on the WhatsApp number that will be flashing on your screen. Do remember to mention your name, the stock that you're looking to invest in, the name of that stock as well. If you're already invested in the stock, mention the buy price, the quantity, as well as the time horizon that you're intending to hold a particular counter, because in that way we will be able to help you better. And also remember that we can only read your messages, we will not be able to take your calls. And today, talking about the experts, we have Kunal Bothra as well as Shahina Mukaddam joining us on the show. Very good morning once again to you, Shahina, as well as Kunal. Thank you so much for joining us on ET Now, and let me kickstart taking all the stock related queries. And the first one is coming on the pharma space, which we actually spoke at length in our BNS and Lens segment. This one is coming from Subrata Mukherjee. He's writing to us from Kolkata, Shahina, and he wants to buy Gland Pharma for the short to medium term. Do you think it makes sense to look at this particular counter? Because there's a lot of news flow every quarter. You see the numbers come along with DVs. Even Gland has been one of them who suffered, isn't it?
Yes, it has, and especially because a lot of his raw materials came from China. I still think this is not the best time to buy Gland. He should wait for some further dips and then relook at the stock.
Okay, moving on, and Kunal, the next query is from Parvinder Singh, and he is holding two counters. NHPC, 100 shares from a price of close to 51 rupees, and he also has Manevar, 45 shares at a price of 1247 rupees. He can hold these names for the next 3 to 4 months. So what should he do in these?
I think you should hold on to both of these stocks. They look attractive. NHPC specifically is something which I do track very closely. Has a good history in the recent charts. Also have been very encouraging above 50 plus levels where the stock has been trading. So I would suggest to hold both of these names, Manevar as well as NHPC.
All right, Kunal, the next one is coming in from Shiva, who's writing to us from Bangalore. He's saying he's a huge fan of yours, but he's saying he has a huge lump sum of money that he wants to also invest in the market, but he wants to invest it for a very short term. That is for 6 months. He wants to know whether he should look at RIL, HDFC Bank, L&T, or also apart from that, is there any other stock that you would invest for him to put a lump sum amount of around 30 lakh rupees, or should he look at some other counters with an entry price?
I think there are a lot many other better counters, because it's very difficult to gauge that when would RIL, HDFC Bank get into a breakout. Since your horizon is short term, you have to be more specific with respect to timing as well as momentum. Maybe in the next couple of days, in case if the likes of RIL, HDFC Bank, they provide a breakout, then I think you may look at these candidates. As of now, something which looks attractive on the charts is Maruti. I think that stock has been a huge underperformer, looks quite exceptional on the charts, and specifically with the recent breakout above the 10,000 levels from the larger cap space. You can look at the likes of L&T. The stock has retraced marginally from the previous highs. I think around 100 rupees, 150 rupees is the correction L&T has seen at 3,000 odd levels. That's also a very attractive buy, which you can consider even at current levels.
Okay, Okay, moving on then, and Kunal, once again a query for you because this one is a short-term query, and as Balaji wants a short-term view on Suzlon, he's holding 1,000 shares from a price of 20 rupees, so at profits currently, good time to book out profits or continue to hold on?
A good time to book out profits from the stock, and I strongly believe that it's a very good time to now come back to the traditional large cap names or the ones which have been more solid in terms of the fundamental stocks. So I think it's a good time to try and make that shift.
Okay, next one is a bit of a longish query actually, and it's coming for you, Shahina. This one is from Sagar, one of our regular viewers, and he wants your view on the entire QSR space. He's already invested in a basket of stocks like Jubilant Food, Barbecue Nation, Devyani, Varun Beverages, Zomato, Westlife, also restaurants, brands. I'm wondering which one is missing out of that. Maybe Bector Food is missing. But he's saying right now he's sitting in a profit of approximately 20% on this particular basket of stocks. What his query is that he wants to know what's your outlook and vision on the space regarding the inflation and the growth as well as earnings performance. Also, he's saying that is there a threat of lifestyle shift can impact these particular stocks, and majority of them are selling junk food or consisting of fast foods. Also, we know that the state of Kerala in 2016 had actually imposed a fat tax. So he's wondering whether this would be a nationwide phenomena. Are there chances of such things hindering the growth for these QSR stocks going ahead?
Well, I believe that they have shown a lot of resilience, and you've seen they have started offering new products, healthier products, of course, to complement some of their own products catering to the Indian taste. And here, I believe valuations, while are expensive, have always been expensive because the growth also is expected to be reasonably good now with the opening up and the travel increasing. I think the consumers are looking for known brands, so I would continue to invest in them despite valuations being attractive, being expensive. Invest at every dip that you get, and I think with inflation coming off, margin pressure also should reduce. So there, I would look at stocks again, like the Westlife, Devyani's. I think both of them look good even at current levels, and you can take your pick, but buy them at dips.
Okay, that's the take coming in on all these QSR counters. But moving on, and Kunal, the next query is from a viewer named Pratha from Kolkata, and he has two stocks where he's firstly he wants your recommendation on Praj Industries. He's already holding 200 shares. But from a price of 378 rupees, sitting at great profits in this one. Good time to book out profits or continue to hold on. And the another query is on Escorts. Today, DAM Capital has come up with a very interesting note on this one. And the target that they are looking forward is 5,100 rupees. And that's why the jump on this counter. Can he go ahead and enter at current levels?
But Praj Industries, I think you should hold on. I think it's an excellent chart. Very recently, the stock has ended a 2-year of consolidation. I think around the 400, 420 odd mark, and it's just risen up by a meager 20% post that, so 20-25% post that. So I believe that there should be more upside left for Praj Industries from a longer term play. Escorts also, on the other hand, you can consider buying the stock, but the only catch with the stock like Escorts is the phenomenal rally the stock has shown in the last 4-5 years from 500, 550 odd levels. 4-5 years back, the stock is already at 3,300 mark. Yes, there could be an upside potential towards that 5,000 mark also, which could be possible for the stock. But then I think the waiting period for that would be maybe another 2 to 3 years at least for the stock price. So I would believe that you can consider buying the stock, but buying on dips would be a better strategy for Escorts. Praj, you can hold on.
All right. Moving on to the next query then, and this one is coming in from Kumar. He wants to know whether it makes sense for him to hold on to Yes Bank, which is bought at the levels of 19 rupees per share, about 50,000 shares of Yes Bank. Kunal, what's your take on Yes Bank? Do you think that he should look to exit or stay put at least to come to his buy price?
I think you should look to exit the stock even at 17 rupees, and I would believe that it's a good time where you can look to start looking at the private sector names. So I think ICICI Bank is something which, in terms of the chart structure at 930 odd levels, 940 odd levels, looks attractive where it's trading right now. you may look to consider few of the other private sector banking stocks. Something which I've been recommending earlier, RBL Bank is something which looks exceptionally strong on the charts from a longer term basis. So I think it's a good time to try and shift to the other private sector banking names.
Okay, Shahina, the next query is from Narayan from Chennai. Wants your view on SBI Cards as well as Borosil Renewables. Can he go ahead and enter any of these names with a 1-year investment horizon?
I would prefer Borosil Renewables over SBI Cards. I think the business there is better, growth is likely to be good. So that would be my pick between the two.
This one is coming in from Mr. Jitendra. He's writing to us from Pune. He's a long-term investor. He wants a fundamental view. One is on EID Parry for the long term, about a period of 3 to 5 years. He already is holding about 70 shares at the price of 465 rupees per share. So, Shahina, firstly, he wants to know whether he should invest some more in EID Parry. Also, should he look to expand his sugar portfolio for very good sweet gains in the sector for a period of about 3 years? What's your take? First on EID Parry, stay put, add more, and also any other names in sugar pack that he can look to invest in long term?
Yeah, he can stay put in EID Parry and he can buy it, if he keeps a stop loss of about 460, he can keep adding on and then he can look for a target of close to 600, 620. So he should stay put, hold. And sugar pack, I would prefer buying at, declines because while molasses and as well as, distilleries are likely to contribute to good numbers, I think the cane pricing because of election year is likely to be an overhang. So, I mean, we should look at dips to buy those stocks, not at current levels.
Okay, moving on. And Kunal, what's your view on HAL? RG Rao from Trichy wants to know, good time to enter afresh in HAL?
Yeah, good time to start nibbling into the stock. Mild correction the stock has shown from 2100 odd to 1950 levels. I think maybe 1900 could be a better zone, but it's difficult to preempt that whether the stock may actually correct and come back to that level. It's already done this in the last 1 week. So I think classically or technically 1900 is a better point to buy the stock, but you can start nibbling at current levels, and in case if there is a correction towards that 1900 mark or slightly lower, that's a good time to average out further.
All right, on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere.
Welcome back to Buy Now, Sell Now, a show where we get you answers for all your stock-related queries. And continuing the same, Kunal, the next query is coming in on a banking name, that is Dhanlakshmi Bank. Ajay wants to know, is this a good time and does it make sense to enter afresh in Dhanlakshmi Bank since the stock has already run up almost 40% recently, or any other name in the small cap name other than Federal Bank you would like to suggest in the banking space?
See, I think I understand that the viewer is looking out for the small cap names on the banking side, but my sense is that these PSU banking stocks, especially the smaller cap names, have an odd tendency of going into swift periods of uptrend, and then for a long period, these stocks they tend to underperform. So I think we saw that happening in the month of March. We saw that happening in the previous year as well, where many of these PSU banks had given exceptional returns. So the only catch over here is that there could be a point where the markets may do well, the bank nifty may surprise on the positive side, but many of these other small cap PSU banks, because of the overbought nature of the charts, could remain into a consolidation. That's the only fear which I have for many of these banks like Dhanlakshmi Bank, etc. So my advice would be to try and shift towards a formidable PSU banking name. You can look at Canara Bank, you can look at Bank of Baroda, you can also even consider the likes of Union Bank. These are few of the options which I would consider or advise at current levels.
All right. This next one is coming from Amit Sen Gupta from Kolkata. Kunal, he wants a technical view from you for a period of 12 months on Hindalco. He's already purchased this at an average price of 446 rupees and he purchased this as early as July. So what should he do?
I think it's an exceptional chart. Now, even though I understand that metal stocks have not performed, they may remain into a bit of a range, or without a lack of news flow for these stocks, they may remain into a consolidation. But I strongly believe that Hindalco is one of the better metal stocks. At least over the last many years, we've seen that stock outperforming and doing exceptionally well, especially when the market gets into that risk-on phase. We've seen Hinalco managing to show a lot of momentum for itself. I would believe that you should hold on to the stock, even though your purchase price is lower. You have a good buffer in that regards. My sense is that the stock should probably come back to that 550 mark, hopefully in the next 6 to 9 months, if this momentum kicks off for many of these metal names.
Okay, Shahina, the next query is on Infosys. Just yesterday we were discussing about the IT space, and today Ashish wants your take on Infosys. He's holding over 600 shares at a price of 1480 rupees and wants to know that maybe in the next 2 years what sort of a return potential he should be looking at, whether it makes sense to stay put given the kind of news flow that we have for the IT space, or rather it makes sense that maybe in the next 1 to 2 years he can enter at a lower price as well.
Well, I would suggest that he continues holding because while the quarter numbers for the second quarter are expected to be subdued, very low single digit or flattish sort of growth in revenues, I think over the next 1 to 2 years, we are expecting the growth to come back and expecting growth to go back into the double digits. So one should continue holding. I think even with the rupee remaining weak, IT stocks should start looking better after a period of consolidation. So I think this is the time to, he can acquire, he can continue to add at dips.
This next one is coming in from Ranjit from Gurgaon Canal. This one's to you. He wants to know about PVR Inox. Do you think it makes sense to buy right now for the short term, or should he look to wait for some more time?
I think wait out for some more time. The only reason for that is PVR Inox had a support closer to the 50-day moving average. Till I think last week, the stock was holding just about closer to its 50-day moving average. But in the last 2 days, the stock has managed to break below this level. Now, if that's the case, then looking at the previous history, the stock has this tendency to come back towards the 100-day moving average next, which is sub 1600 levels for PVR, which means possibly another 80 points, 90 points drop is what you can expect for the stock price. That could be a better zone to buy the stock.
Okay, Shaina, the next query is from Vara Prasad, and he's been holding 2 counters since the past 3 years and sitting at a loss in both of these. One of them is Zydus Wellness, 37 shares at a price of 1945 rupees, and the other one is Team Lease, 25 shares at a price of 3312 rupees. So going ahead, what should he do? Continue to hold on or book losses at this point in time and maybe find better opportunities?
Well, I think Zydus Wellness is, looking a bit weak for the shorter term. So he's not going to get a very good return if he's holding it just for the short term. But I think if he's looking at a medium to longer term, then he can continue to hold. And I think the next one was, I didn't get your next one. Which was that?
The buying price was over 3,300 rupees.
Yeah, so I think he can also continue to hold Team Lease. After a period of consolidation, things are looking up now in terms of recruitment, so he can continue to hold it.
All right. This one is coming in from a viewer, Imran, actually. And Imran, I believe, had Adani Power, Kunal, and he's holding Adani Power about 1,000 shares at a price of 299 for over a year. Now he wants to know whether he should continue to stay put with Adani Power or look to exit or book partial profits. What sort of a strategy?
So hold on to the stock. Now I understand that many of the Adani group of names have not done remarkably well. But the charts for Adani Power still look quite okay. Now on the weekly basis, yes, the stock has shown a negative price action, 4% down, opened with a sharp gap down. But then in case if the stock sees a recovery, say in the next 1 or 2 weeks, it could probably try and come back to retest the 400 levels. So that may be a better point where you may consider booking out profits for Adani Power.
Okay, Kunal, the next query is from Anju, all the way from Dubai, and she's holding 3 banking names, and in all of these 3 names, she's sitting at decent profits, wants to know good time to book out profits. BOI, UBI, as well as PNB is in her list, and she says that the trend is downwards, so good time to average or book out profits from these names. She needs a medium-term advice.
See, yeah, the recent correction has been a bit sharp for these PSU banking names, but my sense is that give it maybe another couple of days or maybe another week or if these stocks show signs of stability and the fall gets arrested, and then depending on how the recovery shapes up, that's where you may look to consider to maybe even average further. I would be, as I mentioned earlier, I would be bullish on the prospects of many of these larger cap or formidable mid cap names on the PSU banking stocks rather than betting on the small cap names as of now. So I think all three names, Bank of India, Union Bank, looks very attractive, and PNB also look very attractive. I would consider to hold on.
All right. The next one is coming to you, Shahina. This one is from Ashwin. He's holding 420 shares of AGS Transact Technology at a price of around 123 rupees per share. He wants to know what should he do with this counter. Is it worth holding on to this particular stock? He's saying that he can hold on for at least 1 to 2 years. But what's your take on this one?
I think he should exit. It's a small cap, and I think the medium term looks pretty. I think the stock will consolidate at current levels. He should exit.
Kunal, the next query is on Goldium International. The viewer name is Karan, and he wants a both short-term as well as long-term view on this one. Stellar gains in today's trading session. He's holding 100 shares at a price of 131 rupees.
Hold on. I think over the last 2020 to entire year in 23 so far, the stock has been holding on to a support of 120, 125 has been a broad support for Goldium. So if it's a smaller part of your entire portfolio, then I think you can consider holding on. Keep 120 as a longer term support or a stop loss for this trade.
All right, this next query is coming in from a viewer, Joseph, who's writing to us from Mysore. And Kunal, he has about 112 shares of Adani Wilmar, which he's purchased at an average price of 612 rupees per share. He wants your medium-term view on this one. And let me add another query that I actually had from an Adani group of counter only, and I believe this one is coming in from a viewer who's not mentioned his name. He has 10 shares of Adani total at 633 rupees per share. Both of them want to know what to do with their portfolios right now.
See, I think Adani Total Gas is something which you can look to exit at current levels. Adani Wilmar, on the other hand, I would believe that you can consider holding on to the stock as of now, and this is purely from a expectation that the stock would probably get into a process of a bounce. Volumes have started to show signs of incremental increase for Adani Wilmar. The stock is trying to form a base. There are signs of RSI divergence on the daily charts for Adani Wilmar, which means that from current levels you may expect another 20 points, 30 points bounce. So maybe 375 is a better level if you're looking to exit Adani Wilmar.
Okay, moving on, and Shahina, the next query is on Sterling and Wilson. A viewer named Pratiksha from Muscat is holding the shares and sitting at a loss of 10%. Can she continue holding it for the next 1 to 2 years and expect some returns, or is this a good time to average out this counter?
I think she should exit. The company is making losses, and it's a smaller cap company. I think she should exit.
One is coming in from Thomas B. George, writing to us from Kochi, and wants to know whether if Praj Industries is a good buy for at current levels. He's not mentioned the time horizon, but looking at his previous queries, he's actually asked a lot of longer term queries. For the long term, Praj Industries, do you think is a good buy right now, Shahina, at current price?
Yeah, I think he can continue to add Praj Industries. It looks good even to hold and to add.
Okay, Kunal, the viewer has been writing to us for quite some days now and wants your view on IDFC First Bank. He didn't mention his name, but can he buy IDFC First Bank at current market price with a 5-year investment horizon?
Yeah, I'm bullish on IDFC First Bank from a long-term prospect. The recent correction has brought the stock back towards 98 to I think 89 to 90 mark. But I believe maybe another couple of points of correction is which I would expect for IDFC First Bank. So maybe closer to 88 could be a better zone if you're looking to buy or average IDFC First Bank.
All right, on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries then. This next one is coming in from S. Krishna Kumar, writing to us from Raja Mundri. And Kunal, this one is for you. AIA Engineering at current price, a good buy?
So, AIA Engineering at 3,410, not a great liquid stock. Average volumes are just about some 8,000 to 9,000 shares every day. So I think in terms of charts also, it's not very, very attractive. The stock has forming a bearish head and shoulder pattern on the daily charts. It's not yet confirmed a breakdown. That breakdown point is, I think, closer to 3,350 mark, and I think it's just about few percentage points away from those levels. So I would suggest to wait out before you can enter into the stock.
Okay, moving on, and Shahina, the next query is from John from Chennai, and he's holding two counters. Firstly is Cyient. He bought 30 shares during those COVID lows of at just rupees 220 rupees, so sitting at great profits in this one. Good time to book out profits or continue to hold on. What's your take? And he also has eClerx, 21 shares at a price of 805 rupees at profits in this one as well. So what will be your advice?
I would think both are good stocks to continue to hold, expected to do well in the coming quarters. So I would continue to hold both eClerx as well as Cyient.
Next query coming in from Rima, writing to us from Pune, and Rima has DLF, about 40 shares, which she's purchased at an average price of 480 rupees per share. Today, the stock is perched at the 2008 high. Entire realty pack is on fire. Now she wants to know whether it's time to book out profits.
I think it's a good time to hold on to the stock. I don't expect this to be a very smaller rally for the real estate names. I expect this to be a bigger multi-year rally for many of the real estate stocks. So what you can actually do is you can also consider look to invest into other real estate names. Anantraj is something which I've been highlighting, so may consider buying on dips at current levels. Godrej Properties and Oberoi Realty are also other stocks which are looking attractive from the formidable ones from the real estate pack.
Okay, Kunal, another query for you, that is from Jaya, and she's holding 300 shares of JTEKT India at a price of 142 rupees, and she also has LTTS from a price of 4,360 rupees. What's your view, both of these, whether to hold on, sell, and any near-term targets for these?
So JTEKT, I don't look at the charts very, very closely, but I think just scanning through the recent charts, it doesn't look anything attractive as such. I believe it's also on the verge of showing a bearish crossover on the daily charts, 50 DMA about to cross below the 100-day moving average. So that could probably be not be a great point for the stock price over the near term. But I think L&T from the IT pack, technology services, if I'm not wrong. So I think both L&T Technology Services and Infotech Mindtree, both of them are looking attractive. So I would suggest you can hold on to that name.
All right, next one coming to you, Shahina. This one is from Sudarshan, writing to us from Chennai. He wants to know about Happiest Minds. He has 25 shares at a price of 905 rupees per share. For the long term, he wants to know whether this makes sense to stay put. Fundamentally, do you think it merits a long-term hold?
Well, yeah, but I think at current levels, he should exit and move to some stronger large cap name. So I would say an exit for the shorter term. But if he's a very long-term holder, yes, he can continue to hold.
Okay, another viewer sitting at phenomenal returns, that is Sampath. And Shahina, Sampath is holding shares of Sundaram Finance, and he bought these shares at a price of just 1,750 rupees. So almost a doubler for Sampath. He's a long-term investor. What to do in this particular name? Continue to hold on or book some partial profits in this?
No, I would suggest he continues to hold on. It is one of the best in the NBFC space, and with the overhang of the stock also having gone, he should continue to hold.
All right, this next one is coming in from Sri Krishna from Hyderabad. Kunal, Indigo is the stock that he wants to know about. He has 50 shares at a price of 2,500 rupees per share. He wants to know whether he can invest some more at current levels into Indigo. Also, what's your outlook on this one for the short to medium term? On the charts, how does this one look? Because yes, aviation space also is very dependent on crude as well, and a lot of movement in the crude also impacts the stock somewhere or the other, isn't it?
Well, yes, of course it does because of the high correlation it has. But I think on the charts also, Indigo Aviation actually looks quite attractive. The stock had this odd phase of correction, which has now passed by for the stock over the near term. No major negatives in terms of indicators also for Indigo Aviation. I think it can continue to hold on or even look to buy at current levels.
Okay, that's the take coming in on Indigo. But for this, viewers, let's kickstart taking all your stock-related queries in the rapid-fire session. And the first query for you, Kunal, this one is from Srinath. Wants an advice on UCO Bank holding 1,000 shares at a price of 41 rupees. Any near-term targets in this one?
42.5 to 44 could be a target range for UCO Bank.
Kunal, do you track Muthoot Capital by any chance? Because our viewer has about 180 shares at a price of 445 rupees per share. Should he exit this count or stay put?
You can continue to hold on, keep a trailing stop loss of 440.
Okay, Shahina R.K. Jalan wants a actually short-term view on Biocon as well as India Cements. Would you be able to advise him?
I think both of them are hold and continue.
Alright, the next query that I have is coming in from Sudha, I believe, wants to know about Avantel as well as BLS International entry price for 1 year time frame, Kunal.
So the first one I don't track, BLS International, you can probably look to consider buying at current levels.
Okay, Shahina Poonam from Punjab holding 250 shares of Gokul Agro from a price of 113 rupees. What to do in this one?
Gokul Agro, she can continue to hold.
Alright, Mr. Singh from Pune wants to know about Kiri Industries, Kunal. Technically, good level to enter for a period of 3 years?
Not really.
Okay, Padmasiv Rao Shahina has been holding shares of Anthony Waste Management since the IPO and the stock is not doing much. So what will be your advice? Any hopes on gaining from this name?
Yes, I think she should continue to hold. It's in a very strong segment. She should hold.
Kunal, Sun TV, Sushil Kumar has bought at a price of 550 rupees per share about 1.5 years ago. Should he look to book profits, stay put? He can be in the stock for the next 6 months, he's saying.
I think for the next 6 months, I would advise to hold on.
Okay, Shahina SK Saran is holding 100 shares of SML Isuzu at a price of 1265 rupees. He's been holding for the last 5 years. What is the outlook on this?
Outlook looks pretty weak and I think she should exit.
Alright, just lastly, Kunal, Jet Airways. Do you think anybody should look to venture into this counter right now by any chance?
Not really at all.
And if someone is already invested, then?
I think book profits and or exit the stock and shift back to internal vision.
Alright, so that was George, your query that was answered by Kunal. But on that note, we are totally out of time on this edition of Buy Now, Sell Now. Thank you so much, Shahina, as well as Kunal for joining us on the show, giving your take on pharma as well as resolving queries. And with that, it's a goodbye from Shrishti and myself and also the team who put that show together. But stay tuned, Markets at Noon coming up next.